Good afternoon, George Cavaligos for HFT Bonds and Notes. I hope you guys understand buy the dip. Perfect retracement last night. We went right down to the levels that I highlighted in the video yesterday and in the chat room. I think I was a little more forceful probably in the chat room highlighting those levels. First thing I got in this morning, bonds are sitting right near the lows at 145.04. And I look and I see 145.04, that was perfect C equals A off of the highs from yesterday. I immediately jumped on Twitter, got the chat room open, buy the dip, BTD, buy the dip, exclamation points, trying to type, trying to put in my buy orders. I hope you guys were there. You know, we didn't get all the way down. I think the low in the 10-year was 130. 218 maybe last night, and I think I highlighted 1718. Can't get much better than that, guys. You know, I think those levels are wrong. I think I'm talking about different levels. Hold on, give me 1 second here. 132.08 to 10 was the previous highs. 10 plus was the low of the 10-year. It's close enough. You know, I think I bought the 10-year at 13 at the same time the bonds were trading like 06, and I'm typing buy the dip, BTD, buy the dip, buy the dip. Okay, I don't know what else I can say. You know, my trading partner over here says, why don't you, buy them here, sell them here? I said, I don't know how much clearer I can get. I say buy the dip overnight, look at the previous highs. BTD, buy the dip. You can lead a horse to water, you can't make him drink, I guess. I don't know what else to say. But now we had this smoking rally. I said, start getting out against the previous highs at 17, 18. And then when we hit 25, I said, that's it, out of all my longs, done. I think we went up to 28, down to 18 again, I think. Yeah, I didn't get back long again. I was kind of concerned that that dip came off pretty fast and pretty hard, and I wasn't real sure. I thought maybe we'd go down a little bit more, maybe overlap the previous highs at 17, gun some stops and then rally. Now what do? Tomorrow's non-farm payroll. The markets have priced in a weaker number. The initial estimates I saw early this week for non-farm payroll was to be plus 200, some plus 220, and what I'm seeing now is plus 140, plus 160. Some people are still up around plus 200. I think a plus 200 number, the market gets smacked pretty hard initially. And I'm kind of leaning in that direction now because we have to start thinking about next week, and next week is the refunding. Tuesday starts the 3-year auction. Tuesday starts the 3-year. Wednesday's the 10-year. Thursday's the 30-year. Typically, the market will back up into those auctions. Typically. Now, obviously, the markets are concerned about slowing economic growth. I think we've priced in a lot of that. If we get a disaster number, if we get like a plus 50,000 or whatever, the market's going to rally some more. And we're looking at some significant resistance levels over the market. I sent out an email this morning after we put up the highs highlighting how important the current 146.5 area is in terms of resistance areas. It's the 50% retracement of the whole sell-off that we saw over the last 6 months in the bonds. It's the old previous fourth wave highs at 146.11, which we just breached by a tick. There's the old roll gap. I think it goes from, today's highs, 146.12 up to 146.23. My favorite trade tomorrow is a gap fill. Bonds rally on a somewhat weaker number. We go up to 146.23, and then I'm going to try a short there. Conversely, if we get a 200 number, the market's going to break, and I'm going to look at those old highs and see how it'll hold. You look at the bonds, you got important highs basically at the round figures. Now we're messing around with the 146.5 area. The 145.04 to 145.06 level is going to be crucial support. So that's the kind of parameters I'm working with right now. I'm still more friendly. I'd love to buy a dip next week on the day of the 30-year auction, which typically marks an important low in the market. That would be the perfect trade. I'd love to see the markets, make a slightly higher high tomorrow and then kind of slowly drift lower into the auctions next week. Trade all the way back down to 145 even and maybe even 144 even. I'd be surprised to see that, but those are the kind of levels that I have at least initially in my mind here. Okay, got to get ready for the webinar. It's at 3 o'clock this afternoon, Chicago time. It's free. You guys love the free stuff. You're loving these videos. Come and join us for a little bit. Got Ashraf on first. He'll be talking from London about the currencies and the metals markets. Then myself, and then Fari on the equity side. Can't beat it, guys. If any type of trading that you're involved in, we're covering the whole gamut. Obviously, the non-farm payroll numbers are big. We've seen some big moves out of the Bank of Japan last night. Some moves out of the ECB. I think people were afraid they were going to ease. They didn't ease. The euro put in some kind of a spike low, and now we got this huge outside day up in the euro. I think euro strength could lead to some weakness in the bond market. It's a possibility. It used to. It isn't right now. But it could be one of those lag things. If the euro is still strong tomorrow, we get an okay non-farm payroll number, and the euro rallies, we could see some further downside in the bonds and notes. I'm still bullish, but I'm kind of, leaning a little bit here towards the other side because we've had such a smoke and rally already, and we've priced in a lot of bad news, I think. That's the bottom line. Have a great night. I'll see you guys tomorrow.